What's going on, guys? Mike here, Crypto Jewels. I'm going to do a video today on how to find price targets with fib extensions on Elliott Wave, which is my primary mode of technical analysis. So first and foremost, I'm not a financial advisor. I don't know what the fuck I'm doing. I do this for fun and for entertainment. So don't blindly follow anything that I talk about or that I do here. So if you want to learn something, then this is potentially the place for you to be. I'm really enjoying doing these videos. I actually feel like it's more interactive than how I've been on Twitter with just taking a screenshot of a fucking chart, throwing it out there and assuming everybody knows what the hell I'm talking about. So hopefully you guys are liking it too. But let's get down to business here. All right. So Elliott Wave, as we've discussed in prior videos, Elliott Wave structures move impulsive in the direction of the trend. So it could be up or down, whichever way the trend is heading. That is the way the impulsive legs move. So you have 1, 2, 3, 4, 5 up, and then you have a corrective wave, which is typically a 3-wave pattern, which consists of an A, B, and a C. And you have that corrective leg moving against the trend. So in a bullish trend, 1, 2, 3, 4, 5 is impulsive upwards, and ABC is corrective downwards. Flip it around in a bear trend, 1, 2, 3, 4, 5 would actually be impulsive downwards, and ABC would actually be corrective upwards. So don't get confused with impulsive always meaning up, and don't get confused with corrective always meaning down. So in this scenario, we're assuming we're in a bull trend here, and we are doing Elliott Wave and price targets, fib retracement targets, and trend-based fib extension targets based on a bull trend. So basically, let's assume this is our price. Price moved up to this leg here, wave 1, 2, 3, 4, 5. So how do you predict where the price is going? So first, if you're not familiar with TradingView, that's all I use, tradingview.com. You've got your toolbar over here. You've got your trend-based fib extension tool, and then you have your fib retracement tool. So those are the two tools we'll be using. So grab your trend-based fib extension tool, and we will assume that this price from here to 1 has already happened and down to, well, let's figure this out. So from here to 1. So in order to find where we think 2 is going to retrace down to, assuming this is a leg 1 up, which a leg 1 up would be a 3-wave structure, or I'm sorry, a 5-wave structure. So on a lower time frame, it would look something like that. So you'd have basically five waves to create your 1. Okay. So that has completed. You're thinking it's a leg 1. You take your retracement tool from the bottom of where the price wave 1 started to the top. And typically I like to see it retrace down to 618, which is right here, which is called the golden pocket if you don't know. I mean, it can go 382, it can go 0.5, and it can go 618. But if I'm going to get in on this leg here, I'm going to get in at 618. So that's where I'm going to set my buys at. Now, how do you determine where your wave 3 is going to go? So we've already got our leg 1 up. We've got our 2 down. And then we are starting to see a reversal here, and we're starting to get confident that we are going to start being impulsive, and you're starting to see your next 5-wave structure up. What you can do is you take your trend-based fib extension tool, go from the bottom of 1 to the top of 1, down to the bottom of 2. And you typically want to see a wave 3 hit the 1618 level. That's where I will set my sell targets. So if I bought down here, I will try to sell the 3 up here somewhere. All right. So now you got your leg 3 up. You want to know where the hell you're going to retrace to for your leg 4, which is a corrective wave down. So you take your fib retracement tool here from the bottom of 2 up to the top of 3, because we already see price is starting to top out. It's starting to get rejected, and it's starting to move down. So you can assume that you are heading to a leg 4, wave 4. So I've got my 382. I've got my 0.5, and I've got my 618. So wave 4, depending on how strong the trend is, we'll go 382, 0.5, potentially 618, but you don't ever want to see it overlap into wave 1. That's when you know you're actually in trouble, because that is an invalid count. So if your price here overlaps into leg 1, this count is invalidated, and you got to figure out a different count. But it can, in this case, as you can see, 618 is just above leg 1, wave 1. So if it went down to 618, you're still fine, and your count could technically still be valid. So 382, 0.5, and 618 are where you want to start really averaging in if you're going to try to catch this 5th wave up. So how to determine your 5th wave up target? You take your fib retracement tool, and this is the target I use. Now, depending on how strong the trend is, I might adjust it, and I might not just sell right when it hits 1618. I'll look at price action, see kind of what it looks like. But at that point, it just really depends. But I really like catching wave 2s and playing them up to 3s. I try not to play wave 5s, but a lot of people do. And if you do, your fib retracement tool, your target would be top of 3 down to bottom of 2. You see that it's starting to reverse here, and it's starting to impulse up again. 618 is what I would say would be in crypto, a fairly conservative target for a 5th wave. So there you go. Those are your targets for your wave 3, for your wave 5, and your targets to get into a position on your corrections. All right. So once an entire wave 1, 2, 3, 4, 5 has gone, and you are retracing into an ABC, and now you're correcting. Sorry, I shouldn't say retracing. You're correcting on an ABC. In order to find that wave or that spot where you want to get in at, grab at the very bottom of where wave 1 started up to the top of 5, and you're looking for really, again, same thing here. You're looking for 382, 0.5, or 618. I really like 0.5 and 618. Again, it depends how strong the bull trend is and the market is, and also what time frame you're on. But usually 0.5 and 618 is where I will look to enter after on an ABC after a 5-leg impulse. So let's look at this on an actual chart here. Let's go look at MTV. So knowing where you are from an Elliott wave standpoint obviously is the most important. So as I've mentioned before on my last MTV video, this is, in my opinion, a complex correction. You've got your A, B, C, which creates your W, and then you've got, actually, I don't know why this is not, you got your, this is wrong. You've got your A, B, C up, creating your X, and then you actually have an ABC down, creating your Y, an ABC up with your X, and then an ABC down to create your Z. So this is a complex correction, W, X, Y, X, Z. All right, so now knowing that, and you see you've bottomed, you're starting to kind of get impulsive. So here you've got a 1, 2, 3. Here, I'll show you. So here you've got a 1, 2, 3, 4, 5 up, which should create your first leg 1 up, right? So you see this is impulsive. And then you have an A, B, C down, which is corrective. So A, B, C down. So if this is a 1, you can take your trend-based fib extension tool, start at the bottom where the price starts, go up to the top of wave 1, to the bottom of wave 2, and we should see wave 3 hit 1618. Let's see if it does. So there we go. It hit 1618. So it looks like this. You got 1, 2, 3. I got to move my little screen out of the way here. 4. And then 5 ends up running quite a bit past the 618 that we just talked about. So if you take your fib retracement tool, your 5 actually went past 2618. So that is a very, very strong impulsive wave up, where I told you I would conservatively get out at on if I bought a 4, or even if I decided to buy a 2 and then hold to the 5, would be around 0.005, which would still have been, this is actually a trade I took, still would have been 1,300%. So hopefully that helps you guys, gives you an idea of how to enter markets and how to exit markets, where to put your sells, where to put your buys, and of course, always use stops. This is not foolproof. If it was, I'd be a fucking billionaire. You have to use your stops. You have to use risk management. So don't just buy something and then not put a stop in it, because you're not a genius. I'm not a genius. We don't know everything that's going to happen. So just make sure you're, you're intelligent and your risk management is in place. So take care. Hope you guys like it.